In this video, you'll learn about breakout trading strategy combined with order flow. You'll learn how to open trades, set stop losses, take profit, position sizing, etc. I personally trade three major types of breakouts. Number one, after a trap. Number two, after liquidations. And number three, after absorption. And now you are going to learn all of them and how to use it to boost your trading. Before we learn about all of them, as always, let's cover a little bit about what's breakouts and what it means and why they works. The breakouts, it's example for you like this one. It is some area where price consolidate, and after that price moves into some direction. As you can see, like here in a range, when you trade, you take trades and you can make really little money. But when you take such breakouts, have a look how compared to this range price moved a lot. And you can see, for example, from this area, price also moved a lot. But before that, in this consolidations. In consolidations, it's difficult to make money, but breakouts give you good potential profits. But when you trade breakouts, it's really important to understand in what areas, in what time price will really move, and in what time that would be like this one. Have a look. Price came to range low and after that moved into opposite direction. The same here, they did real low and moved exactly into opposite direction. For you, it's important to have really good confirmations to take trades, and those confirmations based on indicators that I will show to you soon. Okay, let's cover first type of breakout trades. It is after a trap. What trap means and why it's so important for us. Let's cover this APT example that I prepared for you. Have a look on this area. It is area where price traded quite a lot, and what I showed to you at this moment, it is indicator of open interest, indicator of a delta, and volume indicators and volume profile. It is all together order flow indicators. Why are they so important? Because they show to you a data where people bought and sold a lot of coins, and based on that you can boost your accuracy. By the way, for you I prepared 3 lessons about those indicators. They would be here in the cards. When you finish this lesson, watch all of them to understand it. It is 100% free. Have a look. Open interest. What shortly open interest means? It is amount of trades open on exchange. One number means one coin. It is one APT coin on the futures, Binance futures. And have a look. In this area, people added approximately from 5 millions to 7 millions, 2 millions additionally new positions. And pay attention that most of these positions were exactly here at high. And ask yourself, does really wise people buy after such significant rise? That's example for you, absorption. Some retails buy a lot after big movement because they don't want to miss a train, but institutionals from other side, they absorb it. That's why it calls a trap. And how market works? Market works really simple. If, for example, retail people here bought a lot of coins, there always must be other side of a trade. Always. That means from other side, institutionals open short positions to make money while price drop. And in one moment, institutionals push price down, and people that get trapped here, they force to get out with stop losses. And when you get out from stop losses from long position, you sell and you dump the price. That's why quite often price will do beautiful breakout after a trap. How in this case it's possible to take a trade and how to calculate position size. Let me show to you that stuff on this beautiful on TradingView. I personally use another platform more advanced, but TradingView I know that most of you use it. Here you have area of a biggest accumulation, and let's imagine you face the situation exactly here. And how would you take a trade? First, it's difficult in some cases to understand exactly in what areas there would be a breakout. I personally would take a trade in next cases. Have a look on this VWAP indicator. It's also about all of these indicators will be here. I would take a trade when price would stop below this indicator, and also in the case when I would see a significant sell order. And in normal cases, I would take trade here before breakout, and you simply set a stop loss above previous high, nearly 1%, and take profit to cover all of this previous drop, and in this case like risk reward ratio 1 to 5. How exactly you decide where to set stop losses and take profits? Honestly, it is the best to set stop losses when you see something like this. Let me show to you. It is a special tool that calls a footprint, like this one. Significant orders, pay attention. Price retested exactly this orders, and when you take trade here, you simply can set stop loss above these significant orders because they protect price from rising. And before and while price squeeze down, you have really good entry before breakout actually happens. I do like when there's significant orders exactly on a spot market when people sell a lot of coins. That's the best areas where you can take trades and hide stop losses after those sizes. How to decide where to take profits? For beginners, guys, I highly recommend you to use mathematical take profit. Set, for example, 1 to 4 goal, and always check, do you have any significant level before? As you can see on this example, next significant levels, it is this area, and it is really good to set take profits before this significant zone, because sometimes this zone will become really powerful support. That's example of a trap traders. Let's cover a second example on a trade that I personally took a few days ago on Solana. It also were after trap traders. Have a look. Solana, beautiful short exactly in this area. Here I took 1 to 3 risk reward, and pay attention to Solana. What were here? The same stuff. Open interest jumped exactly at high, exactly on this candle on re-high. Also with super positive delta. What does it mean? It means traps. A lot of people try to buy this coin and push the price, but they failed. And imagine you sit here with your long position. And in normal cases, every person has stop losses, liquidations area. And quite often you will see that price will go into opposite direction to hit stop losses of these people. And here you can see how this actually happened. They dropped into this area, and most of people that took long here, they hit the stop losses. How did I take a trade here? What was the exactly place for entry, and how you can trade it in the future? How exactly I took a trade? Here price retested this beautiful view up, and biggest volume here appeared exactly at high of this candle. That's good signal that someone pushed price down. And here I took a trade with such stop loss approximately 1% and take profit where this one 2070 exactly into area where most of the people hide their stop losses. Also pay attention to another confirmation that here were a trap. A lot of people, cumulative delta, pay attention, cumulative delta. Biggest delta exactly at high. Have a look how price rose so much, but biggest positive delta exactly at high. And that's why I took a trade with a target this significant volume. And you saw price exactly took it. On what you should pay attention before you take trades after traps. First, wait for some additional confirmation. Like this example, it was the best because price here gave to us several confirmations. What I mean by that? For example, like here, price pumped, here people get trapped, and price retested that significant trap and failed to continue rising. And here again, price tried to rise, the volume increased, but again failed. Why is that good? Because it shows to us that someone during every rise sell coins. That's really the best confirmation. Okay, friends, let's go to second type of breakouts. It is after liquidations. What's the difference between trapped traders and liquidations? Trap traders, it is, as you saw an example on APT, price rose into some area and some people bought a lot of coins in this area and price went below them, and they have a choice to get out with stop losses and push price down more, or wait while price reverse, but in many cases they will go down to take their stop losses. But liquidations, it is when people, some like this example on APT. Imagine some people bought APT in this area. They bought like some significant amount of coins. And when price dropped 43%, and even if you bought with second leverage, in most cases, exchange automatically sell your coins because there is no margin. And there are always some people that trade with margin. And after such massive drop, some people sell a lot of coins. And when you see that price stop, and for example, like this one, delta in this case were more than minus 2 millions. It's a lot for a PT. Have a look on this cumulative delta, how exactly during this drop, delta went down so much. And pay attention what happens the next. Delta were continued dropping. That means that people were continue selling because they scared that price may drop way more. But in that case, have a look, price started squeezing up. That's example for you that someone absorbed, someone bought all that liquidations. Because remember one rule of trading, you cannot sell if there is no one who buy. There are always two sides of a trade, always. And if a lot of trap traders here that trade with stop losses got liquidated, that means they sell their coins to someone, and someone who buy it after 43% drop within a few days. It's like quite cheap, and those people would like to make money for rise. And here it is maybe one of the greatest example. And those people, they absorbed all the sellers, they absorb it, and after that they just broke, as you can see, all of this cascade of levels and moved price 14%, and at this moment it is nearly $88, even more, like nearly more than 20%. That's example for you of breakout after absorption. How exactly here you can take a trade. Okay, let's open TradingView and let's open our history. It was exactly this situation. There are several ways how you can take a trade. Let's cover all of them, and let's cover how you can calculate position size. First, let's cover back to this trade and our screenshots. Pay attention on this spot screenshot. This spot screenshot shows to us the biggest volume traded exactly. And this white color shows biggest concentrated volume. As whiter, it means bigger volume. And pay attention that before breakout, some biggest volume appeared exactly here. One of ways how I personally take a trade, what I do, I see, for example, here we have this significant volume, and I wait while price retests this significant volume, and if new buy order appears, I can take a trade exactly from this big orders. That's it. Honestly, I don't need to wait while there would be some technical analysis part and something like that, because if someone bought a lot, I would like to follow those guys. Let's cover all that real-time data here in OrderFlow platform. Pay attention to this one. I would like to show you how exactly those numbers looks. Like in this area, someone bought, pay attention to this significant volume nodes, 160,000 coins, 158,000 coins. Why I show it to you? Because market moves, because people buy and sell, and for you just to understand 160,000, if you multiply by current price 6.40, it is more than $1 million, and someone bought $1 million coins here. Additionally, 130, 152. And pay attention on this significant volume, 200, like significant areas that someone just absorbed. As I told you, one of scenarios how you can take a trade with this one, you wait while price retest this area, and in this area you see when again significant volume appears, and you can take a trade, set stop losses here. Or if you like for risky trades, you can just set stop loss below this swing low. That's it. It is first scenario how I personally take trades. It is advanced stuff, and you need to know how to do it. And if you need to help from me and my team to master these breakout strategies, we can help you, guide you. Below this video there will be information about our programs. You can join, you can get some stuff for free. Just read into information in description. As I told you, I personally would take a trade from that significant size in a footprint and set stop loss, like in this case, like 2%. Like I saw significant volume, and I set stop loss below this low when 4-hour candle closed. What would be a take profit and position size? About position size, remember that we calculate position size with this tool on TradingView. Or you can use the same stuff in Atas, a platform, OrderFlow platform that I use. And about this platform, I prepare for you full free templates that I personally use and free tutorials. All will be in description. Also for free. You can have this stuff that calls long short position. And what you do here, you simply write down here your risk per position, account size, like risk in position. And after that, this stuff shows to you quantity 416, for example. With risk 50 USD, you need open a trade 416 coins to be in a position. And after that, about take profit. Honestly, take profit, friends, depends in what area you take a trade, because sometimes such liquidations, they are really massive and you can keep your position for really big period of time. Like, pay attention in this case, they pumped 30%. But honestly, such significant rise will be only after such massive drop or after massive pump. In normal cases, honestly, in normal cases, for you it will be completely enough to have a target for re-high, especially when you have such amount of levels above. What could be other ways how you can take a trade? Exactly, confirmations. Other confirmations could be, for example, you see this swing low, you see that price retested this local area, and if you build a volume profile here, you would see biggest and concentrated volume profile. And for example, you see that price retested this major volume. Quite often, this major volume will be key support, like exactly this point of control. And you see price retested this point of control, and you see that price start closing above it. And that's it. You just simply set buy limit order with stop loss below it. It is as other way. And also another way that many retail use, they try to take exactly here when price breaks. Here I would use only daily VWAP, and I would see when price stay above daily VWAP, only in that case I would start taking a trade. But this one, when significant volume on spot appears, the best. This one after liquidations, my favorite one, but at this moment we will cover only one, because all other stuff you will see when you join our programs. And let's go to another one after absorption. There could be a different type of absorption, often could be a different type of absorption. Example, let's cover this example. Have a look on this situation. The same compared to APT. You have quite a lot of levels which potentially price can break. You have this volume profile area, and price potentially can get out from it. But here, the most important stuff, it is this one. Pay attention to this significant order block. It is really powerful signal of absorption, because have a look here. Someone tried to sell negative delta, and someone bought all these coins. And pay attention to this. Just calculate by yourself amount of contracts that were bought exactly in this tiny area. Pay attention to left side, how in average traded 12,000 coins, 493,000, 628, 4 million, but here 25, 22. It is really significant absorption. And even here 10, 12. Like in this tiny area, it is nearly 200 million coins were absorbed. It's a lot for this instrument. And quite often you will see that price moves from such significant volume into opposite area, into opposite levels. And here, it is really cool to take breakouts of this area, because here you have this significant volume as a support. And other type of absorption, it is when price continue a trend. Let me show to you additional three or four examples. Let's cover this example on Dogecoin. As you can see, it happens on many different coins. And my friend, remember to feel free to share any your questions, any your thoughts about this lesson. If you need some help, right, as soon as I see a comment, I personally will reply 100%, promise to you. Have a look on this one. Dogecoin were in this area where someone bought a lot of coins. Pay attention. But here maybe you didn't see really good and beautiful entry place. And for you, it is important to find good place where you will have really tiny stop loss. And pay attention here. What we need for this absorption for continue. First, we need to price to break some important area like this, significant area where massive volume were accumulated. Second, when price breaks that area, massive volume start to entering and absorbing, and price slowly squeezing into the trend direction. Example for you like this one, price broke this area, and have a look here, what happened? Exactly in this area, pay attention to this volume, guys, it's insane volume. In this tiny area, nearly 500 million of coins traded on Dogecoin, it's insane. And pay attention to what's going on. Insane volume trades, and pay attention that price for a start stay exactly in the middle, and after that slowly squeeze up. And quite often what they do, they will retest this significant volume node and will continue pumping. How exactly here you take a trade? Here honestly really simple. You have this significant volume, you wait while price squeeze, and in 80% cases they will retest this significant volume. You take trade here and set stop loss below this volume. That's it. And you just keep that trade until you will see massive volume spike like it was this one. And when you see like this one, massive volume spike exactly on this candle, you get out. Have a look on this tails, how many times it is exactly this volume. Have a look how many times they retested exactly this significant volume. If you would set a buy limit, you would have so many opportunities to take this trade. Really close situation with BTC, pay attention. Same, price broke this important area, and exactly at the moment of breakout here they absorb all volume, and price slowly squeeze up and bounce from this significant volume. And if you take a trade at retest, set stop loss here, you have, like in this case, risk reward 1 to 9 if you use limit orders. Remember that what I show to you, it is not like a holy grail, it will work with 1000% cases. No, sometimes there would be traps, and it's always better to use this stuff into trend direction. Like this example for you on Ethereum. Price dropped a lot, and some people can start thinking, oh, it's dropped a lot, we should start buying. Yeah, and someone absorbed all that buy orders. And pay attention to this order block. Altogether, 20,000. How much? 46,000. Guys, altogether nearly 300,000 contracts on Ethereum. It's insane. Compare average volume like 3,000-4,000, but here 40. It's like 10x to normal volume. It's insane in tiny area. But what happens in this case? Pay attention that what they did this trap. If you would take a trade here as a bounce, here would be big chance that price would take your stop loss. And sometimes what I do, I allow myself to reopen when price take my stop loss. And pay attention how quite often they retest exactly this biggest concentrated volume in profile. And after that, price drop by 7%. And here the same. You take a trade exactly at retest to this volume, and for you it's enough to set stop loss above this significant volume node. That's it. That volume protect you and your position. But remember that in some percent cases, 20, 30, sometimes 40%, they will take stop losses before. But here risk reward so big that for you it's okay. One more example on Ethereum, the same, have a look. Significant area where massive volume entered in this area and price broke this area. And after that, exactly at re-high, pay attention, massive volume appears and price, as you can see, slowly squeeze up. And again, you take a trade for continue. My friends, I shared with you my advanced approach, how I trade breakouts, ideas for it, stop loss sizing. At this moment, I prepared for you video about what's open interest, what's cumulative delta. There would be 2 video lessons. Highly recommend you to watch to understand this strategy better. If you need any help, in the comments, you will find all information. Thank you.